Welcome back to the Talking Hedge. I'm Josh Kincaid, and this is your Cannabis Business Podcast. The Marijuana Business Magazine asks if vertical integration is the right approach for your cannabis business. I would say right off the bat that you can take a look at data that already exists where you can see that Washington State doesn't allow for vertical integration. There's a separation where you can be a producer and or a processor, but you can't be a retailer as well. You can have a retail license, but if you do, that's all you can have. So you can be a producer and or processor or just a retailer in Washington, but not all the way. You can't be seed to sale. And if you look at other states that have implemented vertical integration, those have a lot more investments. They have a lot more people coming in, and they're doing a lot better. Those are successful companies that have grown. They've become multi-state operators. They've had outside investment opportunities, and the growth and success of those businesses are palpable. You can see it. And so there definitely should be every state, every city, any country that tries to implement legality should be looking at vertical integrated opportunities. So Washington State's adult use businesses are forbidden to be vertically integrated, but in New Mexico, cannabis business companies are required to be vertically integrated. Other states such as Colorado and Oregon allow vertical integration, but don't mandate it. So state license types and tax laws also play a critical role in decisions to vertically integrate. Every state's different, and that creates a different risk reward for being vertically integrated versus not. The ability to leverage economies of scale in a vertically integrated business model is a clear advantage. But experts who spoke with the Marijuana Business Magazine largely agree that vertical integration isn't the model for a business to succeed. Because the customer demographics of cannabis is so broad, a diverse number of business models are potentially viable if decisions are made well. And it ends on the question, does one want to be a jack of all trades or a master of one? And I would advise that if that's not your area of expertise, then that you hire out. But you need an exit strategy. And a lot of these companies are thinking that this is going to be a legacy, and it's not. It's a commodity, and a commodity is a race to the bottom in terms of pricing. And so you need to have an exit strategy. You're building this up to get out, and that's it. You're not going to be staying in. No one will. There will be a point where there will be stupid prices in terms of valuations, and you're either going to be bought out or you're going to be ran into the ground. And that's it. We haven't even seen automation. We haven't seen banking come online. And so I would say vertically integrated is the way to go. Whether it's the right choice for you personally, I don't think that really matters. You have a fiduciary duty to your shareholders, to your stakeholders, to your investors, to do the right thing. And that's to maximize and leverage as much as you can. And so if it isn't maybe the right fit, then you need to rethink what you're doing. You need to be taking advantages of much opportunity as you can while you can. And that's grabbing as many pieces of the pie. You need to find subject matter experts and put them in place. And if that means giving them a piece of the pie, do it. There's too often I see in restaurants where they don't give the chef more respect, i.e. money or what have you. And there needs to be more profit sharing. The chef is everything. And there's a lack of respect to somebody who's just sitting at home taking that check, and maybe that's not enough money for them. When you're building a brand, that chef is your brand. That grower, for this analogy, the grower is your brand. And you need to be investing a lot into your product from the very start. And so if you're going to sell something, you should probably have access to the very beginning. So choosing the genetics and the cultivar and the way that it's grown indoor, outdoor should all be decisions made from the very beginning. And the best way to do that is be vertically integrated so that you have complete control, so that when you make that decision to exit, that you can stand by all of those decisions. Understanding all of the facets within the supply chain is important. When I was an intern at the World Trade Center, somebody came to me and wanted to make salmon jerky. So I found them a fishery in Canada, a cannery in China. We imported it through Oregon and distributed it through Costco. But ultimately, finance is the key. So getting a home equity loan, line of credit, credit card advance, everything we could do to get that in Costco was the key. So understanding how to make your idea come from just idea to fruition is a matter of understanding all of the supply chain. So here's a guide to the cannabis supply chain. There are many types of businesses that make up and support the cannabis supply chain, the best of which are positioned for exponential growth as the industry continues to expand. For people looking to invest in the industry, understanding the supply chain and how a product develops from seed to sale is a great place to start in vetting which companies are positioned for success. All cannabis touching businesses, from growers to retailers, must be licensed to carry out a specific step in the supply chain. Each state has their own licensing and enforcement systems that cannabis businesses must work with to stay compliant. There's also an entire category of business technology companies dedicated to tracking the movement of cannabis throughout a state's supply chain, known as seed to sale technology. And these systems make sure that all batches of harvested cannabis are accounted for and that it's possible to tie every finished product back to its original batch. Like all agricultural products, cannabis starts with what's essentially farming. Depending on the state, they may call it growing or cultivating. The companies in this stage of the supply chain specialize in harvesting quality cannabis, which can be done indoors or outdoors. They strive for consistent, dependable harvest schedules that often have proprietary methods of growing to enhance quality and shorten the time it takes for cannabis plants to mature. After harvest, growers will either process their flower themselves or pass on the raw material to a wholesaler who will trim, dry, and cure their plants before creating a finished product. Sometimes one company will grow their own cannabis and produce a packaged product ready for wholesale, but for the sake of overview, we'll assume that they've handed it to a different company. Before selling their harvest, each batch will be assigned an ID and sent for lab for testing, except in Washington, we don't test. Clarification, Washington does test the potency, but not for any pesticides. Each state has its own regulations around mandating testing, but it usually includes reporting on cannabinoid potency and the presence of pesticides on foreign material. As a potential investor, the first distinction you'll have to make is whether you want to invest in a plant-touching company or not. Many larger funds have restrictions that prevent them from investing in companies that produce, move, or sell cannabis products directly. There are many ancillary companies that support the industry that may be better options for investors with restrictions. Companies that support agriculture, including lighting, greenhousing, infrastructure, irrigation systems, fertilizer, testing, and seed-to-sale software. With regards to production and wholesale making the finished product, at this stage of the supply chain, dried cannabis flower is transformed into finished products. This product can look very different depending on the end product. Flower can be packaged into jars or rolled into joints ready for sale. Extraction companies can create concentrate that can be packaged and sold or turned into vaporizers, topicals, or edibles. And these companies will operate like specialized production factories. Products that have been modified from the original flower that was already tested need to be tested again. Most states require a sample of the product to be tested on behalf of the entire batch or products made from the same original harvest, and these test results are then associated with the batch in the state's seed-to-sale software. White labeling is very common in the cannabis industry. A brand will buy a finished but unbranded product from a second company and add their own branding and packaging to create the product that consumers recognize in dispensaries. Branding plays a huge role in the success of cannabis products, as it can be a primary differentiator for both retailers and consumers. Ancillary companies that support production and wholesale include packaging, branding, and creative, wholesale marketplace testing, and seed-to-sale software. Distributors in the cannabis industry come in many forms. Depending on the state and operations of the wholesale brand, distributors can be used in the following ways or a combination of them. Number one is shipping product on behalf of the wholesaler. You can warehouse product on behalf of the wholesaler, serving as an external sales team, or collecting payments from retailers and moving money on behalf of the wholesaler, or contract manufacturing of the product. The variety of distribution models in the cannabis industry can only be attributed to the fact that the industry is so new. So we predict a consolidation and simplification of these models in the coming years, likely in a way that ends up with distributors existing solely to move product between wholesale and retail. Consumers can only legally purchase cannabis from a licensed retailer. Like retailers in any industry, they strive to carry a variety of products that cater to the customer's demographics. As a cannabis retailer, finding vendors becomes a bit more complicated than any other industry because you can only purchase from licensed brands in your state. To remain compliant, retailers must check the licensing and lab testing of all of the brands they're buying. As a business-to-business marketplace of only compliant brands and retailers, companies like LeafLink allow retailers to discover new brands with confidence, knowing that they're licensed. If you're looking to invest in the cannabis industry, you should get a better idea of how products move and the limitations of operating in a highly regulated space, understanding which part of the supply chain you want to impact, and whether or not an ancillary investment is right for you. All of this will give you empowerment and be able to vet potential investments with a more informed lens. More states are approving cannabis sales and new waste processing solutions are coming online, but federal regulations still loom large. So, how is the waste industry keeping up with an ever growing cannabis stream? Today, most cannabis waste goes directly into landfills, but rising awareness around organic waste processing could start changing this approach. Congress recently approved the 2018 Farm Bill, which prompted a national conversation on hemp and its sister plant, cannabis. The bill permits expanded hemp cultivation and allows for expanded sales of hemp-derived products, the expected increase of which will introduce more organic materials into the waste stream. One group working to address these organic waste goals is the U.S. Composting Council. At their 2019 annual conference, the vendors and operators discussed the compostability of the organic waste stream. Processing cannabis residues, including stalks, stems, and root balls, produce a compost product similar to any other green waste. However, limited availability of accessible compost facilities generally force cannabis grow operators to combine the organics with other facility trash and landfill the mixture. While many of these areas are still evolving, one thing clearly won't change with regard to cannabis regulation. Somewhere right now, there's a state talking about legalization, updating rules and regulations, and preparing to issue licenses to cultivating facilities, processing operators, and dispensaries. All of this activity creates new opportunities for waste and recycling service providers to find ways to work within those complex systems. Pre-rolls or joints are still one of the number one items sold, and those pre-rolled or dude tubes, as they're called, they generate a lot of waste. And so there needs to be an opportunity where they're not considered an open container, where they can be brought to a facility and recycled. So until we can come up with a solution, we're all part of the problem. An ex-bond trader says that Brazil is luring CBD investment as demand grows. A former U.S. bond trader turned medical marijuana evangelist sees cannabis cash starting to flow faster this year in Brazil, where imported CBD is the only legal game in town. There's a lot of political uncertainty in Brazil, but there's also a lot of opportunity. Labor is inexpensive. There's lots of land to use, and it's easy to sway political influence. But having said that, I spoke to an individual who's already operating there with 124,000 hectares. That's over 300,000 acres, which is more than what most companies are going to be able to do initially in North America. And so with that mass manufacturing, there's opportunities like Puerto Rico, where you could bring in CBD and then manufacture it for the US market, either into oil or finished goods. You can then utilize Act 20 and export that finished good to the United States, taking advantage of amazing offers incentivized by Puerto Rico. I recently did a podcast on the advantages of doing business in Puerto Rico. If you haven't seen it, check the show notes. I'll leave a link down there. But Puerto Rico definitely has a pot boom. There's a medical marijuana industry that has a lot of growth, a lot of opportunity, an amazing amount of benefits for any US-based business. It's a new industry with a lot of exciting opportunities, said Puerto Rico's pot commissioner Antonio Chilicini, executive director of Puerto Rico's Cannabis Program and Regulation Board. According to the government, companies, doctors, patients, and workers who have paid fees for cards, permits, and licenses to consume, sell, cultivate, transport, prescribe, and manufacture have added 1.5 million to the island's cash-strapped economy, which is still recovering from hurricanes Irma and Maria in 2017 and a crushing $72 billion public debt. The government has issued 77 dispensary licenses and 40 have opened across the island. The government and industry proponents project that the cannabis program could generate $100 million in new tax revenue by 2020 and create 20,000 jobs. Medical marijuana is still classified as an illegal substance, so financial institutions shy away from offering services to the nascent industry. Banking is the biggest challenge, according to Julian Londono, vice president of the Puerto Rican Medical Cannabis Association and a managing partner of NextGen Pharma. Two Co-op, the one local credit union providing financial services to the medical marijuana industry, had to cancel accounts in January after Banco Cooperativo, a larger bank handling the credit union's transactions, no longer accepted their checks. But the problem was solved after two Co-op took Banco Cooperativo to court, and a judge ordered the larger bank to reinstate the credit union's accounts. Still, Londono said one of the toughest hurdles facing the industry is that medical marijuana is essentially a cash business, which he described as a cost-prohibitive and labor-intensive. Lawmakers in the House are expected to vote on the Safe Banking Act, which would also legalize cannabis businesses to use federal banking institutions and alleviate the tension between federal and local governments trying to regulate legal marijuana. Puerto Rico has the talent, expertise, climate, and infrastructure to make the industry work, said Jason Ortiz, Vice President of the Minority Cannabis Business Association based in Connecticut. The group aims to ensure more minorities are part of the growing cannabis industry. Just as a quick reminder, Puerto Rico is the only place in the world as an American or American business that you can go and not be forced to pay income tax legally. So long story short, Puerto Ricans are Americans, but they don't have the ability to vote, and they don't have any representation in Congress. And since you can't have taxation without representation, there's no U.S. federal taxes. They have their own tax system, which has a maximum cap at 4% and a whole lot of other advantages to doing business, including 50% tax credits for the purchase of equipment, 100% tax deductions in some cases. And so if you haven't already seen it, check the show notes. I'll leave a link in there for a video I did on the advantages of doing business in Puerto Rico. Here's your weekly deal watch with 11 deals closed. Last week was the busiest so far this year for M&A deals involving publicly traded cannabis companies. 7 of the 11 deals involved plant-touching companies, with the remaining transaction in the ancillary products and services segment. 3 privately owned companies also completed transaction, bringing the weekly total to 14, the second busiest of 2019. Top raises that closed last week include Los Angeles-based vertical companies closed a $58 million Series A fund. WeedMD, a Toronto-based cannabis producer and distributor, closed a debt financing of $39 million. Massachusetts-based Cureleaf closed a $30 million acquisition of Eureka Holdings. And Vancouver, British Columbia-based 1933 Industries, a vertically integrated cannabis company, completed an acquisition of the remaining 9% equity stake in its subsidiary Infused MFG, a manufacturer of CBD-infused products. Canada just approved another cannabis exchange-traded fund focused on cannabis companies. The Horizons ETF Management, the Canadian exchange-traded funds issuer behind some of the country's largest cannabis ETFs, is introducing a fund focused entirely on U.S. marijuana companies. The Horizons U.S. Marijuana Index ETF is expected to begin trading on Canada's NEO exchange on April 18th under the ticker HMUS. Horizons is the company behind Horizons Marijuana Life Index, which is one of the world's largest cannabis ETFs. HMUS will be the first ETF in the world that solely focuses on providing exposure to companies with significant business activities or significant exposure to the United States marijuana or hemp industries. The index's 25 components are equally weighed, and the benchmark is rebalanced on a quarterly basis. Familiar names in the index include Cureleaf Holdings, Cresco Labs, CV Sciences, and TerraTech Corp. While some securities may be listed on the North American exchanges, the majority of those securities currently trade on North American exchanges that included, but are not limited to, the Canadian Securities Exchange and NEO. Evolve Funds Group, a rival to Horizons in the Canadian cannabis ETF market, is also looking to launch a U.S.-focused marijuana ETF that would trade in Canada. Other U.S.-based ETF issuers have filed plans to list cannabis ETFs in New York, but due to marijuana being illegal at the federal level in the U.S., there are regulatory hurdles associated with launching cannabis funds in the U.S. There's another cannabis ETF called YOLO, which cuts the price needed to invest in cannabis. A new exchange-traded fund focused on cannabis stocks plans to undercut competitors when it debuts just days before its unofficial cannabis holiday on 4/20. With the ticker symbol of YOLO, you only live once, the advisory shares pure cannabis ETF will charge 74 basis points or $7.40 for every $1,000 invested, according to regulatory documents. That's 1 basis point less than the ETFMG Alternative Harvest ETF, known as MJ. The fund is poised to make history as the first U.S. ETF to include cannabis in its name. Issuers have struggled to start funds that directly reference marijuana, in part due to concerns among custodians and other service providers over the legality of the business. Bank of New York Mellon will act as YOLO's custodian, administrator, and transfer agent, according to regulatory filings. The fund plans to list in New York on Thursday, just 2 days shy of April 20th. A cannabis real estate investment trust deepens a California exposure with $27 million property acquisition. Innovative Industrial Properties, the first and only real estate company on the New York Stock Exchange focused on the regulated U.S. cannabis industry, announced that it closed on the acquisition of a 5-property portfolio in Southern California, which comprised approximately 102,000 square feet of industrial space. The acquisition marks their second investment in California, focusing on Sacramento earlier this year. The purchase price for the California portfolio was approximately $27 million in the aggregate. The operator intends to continue to operate the property as licensed cannabis cultivation, manufacturing, processing, and distribution facilities in accordance with California regulations. Last week, one deal that seemingly surprised Wall Street and investors was the national tie-up between New Age Beverages and the largest private employer in the world, Walmart. According to the Monday morning press release from New Age Beverages, Walmart becomes the company's first national account. The retail giant will be carrying a full slate of Marley product brands, including organic Marley Mate and Marley Cold Brew. According to a recent report from food and beverage consulting firm Zenith Global, worldwide sales of CBD and hemp-infused drinks are expected to hit $1.4 billion in 2024, up from just $89 million in 2018. That's a substantial growth, and it's bound to attract companies big and small. Just today, Carl's Jr. announced that they were going to have a CBD-infused burger. So we'll see how that goes on 4/20. It'll be launched in Denver for $4.20. Of course, it's called the Mile High Burger. In October 2018, Bloomberg reported that Walmart was tinkering with the idea of selling CBD products in Canada in over half the country's pharmacy aisles. At the time, Walmart Canada spokeswoman summed up that there was no firm plan in place to carry CBD products, but that Walmart was conducting some preliminary fact-finding on the issue. What's more is the Marijuana Business Daily reminded everyone in October that Walmart already sells hemp oil products online. Not only that, but they're selling rosin presses and all kinds of ancillary products as well. So they've been in the game for a little bit longer than people may realize. Green is the new black, given the impressive growth of the market. Worldwide spending on cannabis reached $9.5 billion in 2017 and is expected to grow to $32 billion by 2022. It's no wonder so many traders have been flocking into cannabis stocks and indices over the last year. While this market offers tremendous opportunities for sensible traders, it's important to understand both the drivers of the growth as well as the different ways to access the balanced exposure to this trading niche. But here's the 4 factors driving cannabis market growth. Aside from the inherent hype that surrounds the cannabis industry, there are 4 key factors that many experts agree in the fueling the recent experienced growth. They are technology, product diversity, international expansion, and displacement of black markets. Factor number 1 is technology. The industry's long-term sustainability lies primarily behind medical products, from production companies applying engineering to maximizing the strength of certain components, to biotechnology companies increasing investments in research and trials and becoming more experienced. The conditions are set for growth in the number of medical applications of cannabis. Cannabinoids have been proven to have a variety of positive impacts in the treatment of a wide range of ailments. Researchers are exploring its potential to tackle such enduring problems such as epilepsy, Parkinson's disease, anxiety, depression, and even breast cancer. Number 2 is product diversity. Cannabis has CBD or cannabidiol, a non-psychoactive component. As this component can be used in the production of many medicinal and non-medicinal products, growers have been engineering a large variety of strains to optimize certain components and increase its applicability across industries and products. Number 3 is international expansion. Today, cannabis recreation consumption and, most importantly, production has been legalized in several countries. This can be evidenced by the fact that large companies like Aurora Cannabis, Tilray, and Canopy Growth are now active in many countries. This regulatory wave is expected to continue, with countries like Luxembourg already announcing liberalization on the cannabis market over the upcoming years. Number 4 is the displacement of black markets. As more jurisdictions loosen their regulations and in some cases legalize its recreational usage, experts concur that it's a significant chunk of the black market revenues will be absorbed by large corporations like those present in the main cannabis stock indexes. Why is legalizing cannabis proving so difficult in the United States? The marijuana industry has appeared nothing short of unstoppable on a global scale in recent years. To our north, Canada became the first industrialized country in the world to legalize recreational cannabis last October. Meanwhile, to our south, Mexico gave the green light to medical marijuana in June 2017. Nowadays, there are more than 40 countries worldwide that allow a physician to prescribe medical cannabis in some capacity. And yet in the U.S., it's truly a mixed bag. On one hand, you have an all-time record of Americans at 66% now favor the idea of nationwide legalization. We've witnessed this support translate into 33 states having legalized medical cannabis, 10 which also allow adult consumption. If cannabis were entirely legal in the U.S., as in Canada, it would almost certainly be the most lucrative weed market in the world. But why is legalizing cannabis in the U.S. so tough? First, we could state the obvious that to support for legalization, it really depends on the party preference. And right now, there's simply no pressing need to push for legalization, even with the American public firmly in favor of cannabis reform. Cannabis right now just isn't polarizing enough topic yet to sway voters. Third, and maybe the most important because everything revolves around money, is that legalization creates a money problem for the federal government. As a Schedule 1 drug, businesses that deal in cannabis are disallowed from taking normal corporate income tax deductions per Section 280E of the tax code. With only cost of goods sold able to deduct from the revenues, most profitable cannabis companies pay a very high effective tax rate. So if cannabis were suddenly legalized, it would no longer subject these companies to Section 280E, thereby costing the federal government about $5 billion in tax revenue over the next decade. And with that, we're going to roll this one up. I'm Josh Kincaid. Don't forget to like, share, and subscribe, or don't, and I'm out. Cannabis companies say they're growing enough pot, they just can't deliver it. I keep hearing this noise about how Canada isn't able to get the supply they need, or that the sales aren't as high as they thought they were going to be. But what I'm seeing and what I'm also hearing from other sources is that its quality is terrible. If you aren't selling oil, it's probably because it's black and nobody wants to smoke it. I know that the flower is being turned back because of powdery mildew, and it's just not the quality that people are willing to pay. So a lot of this has to do with people just pushing product that consumers don't want to buy, and they're going back to their trusted market, aka black market. And it's not really about the lack of demand. We should be seeing flower in Canada dipping and oil going up. And if that's not the case, it's probably because of product quality. Chronogram on Monday joined a chorus of companies saying their challenges in supplying the Canadian cannabis market is not growing massive amounts of marijuana, but transforming the plant into a product that's ready for sale. Organogram has built up its production and distribution side to match the need for pre-roll joints, especially with the automation currently running at Organogram's facilities. Ingle said the company is able to produce more than 40,000 pre-roll joints a day and has produced 2.6 million in total as of Monday. As Ingle manages to meet consumer demand for joints, however, their tastes are changing. Cannabis oils, Ingle said, are no longer a big seller and sales are slipping, but there's now a massive amount of demand for products derived from cannabidiol or CBD. There's new products coming into the market that many provinces are still struggling to ensure that there's adequate supply of what consumers are actually wanting to buy on the shelf. And there's enormous amount of uncertainty for cannabis companies. There's two new variables that will be introduced this year as edible products and vaporizers launch in the fall. Currently, it's still illegal in Canada under the Cannabis Act. Ingle said that Organogram plans to launch vapes and chocolate products, which could add more production uncertainties. Vape hardware and accessories, for example, almost exclusively produced in China, have been affected by the trade war between the US and China. While Canada continues to struggle with its quality and Oregon continues to grow more than 1 million pounds that'll take Oregonians 6.5 years to consume, Washington State is nowhere near using its full cannabis growing capacity. A recent report by the Washington State Liquor and Cannabis Board, or LCB, surveyed 1,155 licensed commercial growers for their capacity utilization, meaning exactly how much of the space they were licensed to use were actually being used. And right there is problem number one. How many tomato farmers do you know where there's 1,200 tomato farmers in one state? Right off the bat, of course, they're not going to need to use their entire growing capacity. There's too many. 3 factors were repeatedly cited as being responsible for not utilizing the entire growth coverage. And it's interesting to note where Washington mirrors and departs from Oregon's issues. The Washington $40 ounce is alive and well, so there's concerns over overproduction, and that's moving growers from holding off on using their full production capacity. Unlike Oregon, Washington growers were unable to use the out-of-state investments. This restricted access to capital, which was a heavy burden and still is for a lot of businesses in Washington state. So those $40 ounces aren't bringing investors running either. Finally, to expand a grow space is not an inexpensive undertaking. Alex Cooley of Seattle's Solstice Cannabis estimated a cost of $100 per square foot to develop indoor grow space, but that could easily hit $250 to $300 per square foot, depending on the bells and whistles of the operation. Cannabis Trade Group in Washington has been lobbying for at least a partial lift on the out-of-state investment ban. The best solution, of course, would be for federal legalization, but what to do in the interim is still to be determined. And with that, we're going to roll this one up. I'm Josh Kincaid. Don't forget to like, share, and subscribe, or don't, and I'm out. The article goes on to say that pension funds that are buying cannabis stocks is showing legitimization. What I'm seeing, though, is desperation. The cost of managing a pension fund is around 7% for overhead. That means they have to make at least 7% just to break even. So these companies aren't investing in cannabis for any other reason except that they need to make a lot of money. You look at the Illinois pension fund and they're beyond broke. It's one of the most desperate places out there. And they're going to have to invest in risky assets like cannabis companies that are speculative in a lot of nature, like tech companies, simply because they need to make that return. You saw that with the Swiss National Bank and the Japanese National Bank. A lot of these companies have negative interest rates imposed by the central bank. And so they're going to print money and then they're going to buy banks that are Facebook, Amazon, Netflix, Google in the tunes of billions of dollars and put those in their pension system because that's a carry trade. They're borrowing money that they just printed and they're putting it into something that's making more money. It's easy to see from a finance standpoint that these pension systems are desperate, broke, beyond broke. California, you name it, all of them are. And so really it's about speculation. It's about trying to beat that 7% overhead. And when you're making the ETF MG Alternative Harvest Index, ticker symbol MG, has 48% year to date. So within 4 months, they have a 48% return. And pension systems need that. Bottom line, this is about dollars and cents. Why did Sweden's government buy Aurora Cannabis and Canopy Growth stock? On average, more than 32 million shares of Aurora Cannabis are traded on the New York Stock Exchange. For Canopy Growth, the average trading volume is much lower, around 8 million shares. There's no way to know who's doing all this buying and selling of these top Canadian cannabis stocks, but we do know who at least one of the buyers was last year. Sweden's government pension fund first bought shares of Aurora and Canopy Growth in 2018, according to a Swedish business magazine. The pension fund initially invested 63 million Swedish kronor, with the valuation since then soaring to 100 million. So why is this Swedish government pension fund investing in cannabis? And why Aurora Cannabis and Canopy Growth? The Swedish equity fund invests in nearly every single stock that's included in a particular index. So it's a fairly simple explanation. Any stock that's included in an MSCI ACWI index has been purchased by Sweden. They're essentially just copying this index fund. The index holdings include more than 2,700 stocks across 11 sectors in 23 developed markets and 24 emerging markets. So when Aurora Cannabis and Canopy Growth were added to MSCI ACWI index in 2018, the Swedish pension fund scooped up shares of both stocks. The Council on Ethics of Sweden's funds recommended against buying cannabis stocks, but the fund managers chose to ignore that recommendation. And it's not just Sweden. Canada's Public Sector Pension Investment Board bought shares of the 4 marijuana producers last year: Aurora, Canopy Growth, Afria, and Kronos Group. Last year, the California Public Employees Retirement Fund, or CalPERS, also invested in 2 cannabis stocks. CalPERS bought stakes in Canadian marijuana producer Tilray and cannabis-fused biotech Insys Therapeutics. Both were relatively small positions, however, a few $100,000. They also invested in alcoholic beverage maker Constellation Brands several years ago. There's turned out to be an indirect investment in Canopy Growth as well in 2017 when Constellation bought a 10% stake in Canopy Growth. And with that, we're going to roll this one up. I'm Josh Kincaid. Don't forget to like, share, and subscribe, or don't, and I'm out. The best example that I can give for the difference in how banking and access to banking services can make all of the difference for cannabis businesses is to make the comparison between Canada and Washington State. Washington State initially had a resident requirement for investors. So you had to be from the state, or a certain percentage had to be from the state. And so that affected a lot of out-of-state investors that weren't able to or didn't want to deal with a certain regulatory environment for investing in Washington cannabis. What we saw in Washington with the restricted investment capital was that businesses weren't able to expand. They weren't able to grow as much. Whereas you look at Canada and you see a lot of companies going to Canada to access the public marketplace, to become publicly traded, to get more capital, have then come back to the US and been able to pay out 800, 900 million for hemp activities whether it's a farm or producer processor in New York or what have you, there's a lot of capital coming back. And that's simply just having the access to it, whereas people in Washington State are struggling just to expand to another area like California. These companies in Canada have been able to access banking, access capital, go nationwide, and then go interstate, international, to US, to Colombia, to Spain, and beyond. Ultimately, access to capital is huge. It'll be the biggest game changer that this industry has seen since legalization. And that's not saying much. It's only been a couple of years, but there will be a lot of opportunities. For example, machinery. There's been innovation, but without access to that capital for leasing or loans, then you can't automate. You can't innovate with automation. You can't have automation without capital. It all goes hand in hand once everyone is able to scale up. Once you can capitalize to scale, you'll be able to do a lot more. So check out the link in the show notes for my recent podcast on automation, Capitalize to Scale, that we had hosted at the World Trade Center. It's a good one. In my opinion, one of the largest influencers for the cannabis and hemp industry is access to banking. With banking, you have convenience of transactions and payments, compliance, as well as lending options. And so there's been a lot of push towards regulation and approval for cannabis businesses to be able to bank legally within that framework. And so there's been a massive request to Congress to kind of push and implement for a Safe Banking Act. The Division of Financial Institutions, the Department of Commerce and Consumer Affairs, along with the Coalition of Financial Regulators from more than 20 states, is asking congressional leaders to consider legislation that creates a safe harbor for financial institutions to serve businesses operating legally under state law or in trusted states with the full oversight and jurisdiction of cannabis-related activity. They want to establish a safe harbor for banks to serve entities in an effort to reduce the risk of large cash-intensive operations and bring the safeguards, activities, and standards into the regulatory reporting compliance framework. The commissioner and regulators from 24 other states and territories sent a letter to Congress describing the well-documented conflict between federal and state laws, which has created barriers for financial institutions desiring to serve businesses involved in state-licensed cannabis activities. The regulators shared the concerns with respect to public safety, increased difficulty of tracking the flow of funds, contributions to a loss of economic activity, workforce development, and community development opportunities. And with that, we're going to roll this one up. I'm Josh Kincaid. Don't forget to like, share, and subscribe, or don't, and I'm out.